Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is August 7th, 2025, and we're diving into Gilead Sciences' second quarter 2025 earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Gilead Sciences has had a notable quarter, and I'm excited to break down the details with you.
Let's get started with an overview of Gilead Sciences and their latest earnings report.
Gilead Sciences is a biopharmaceutical company known for its innovative treatments in areas like HIV, liver diseases, and oncology. In their latest report, they announced a 2% increase in total revenue to $7.1 billion, driven by strong sales in their HIV and oncology portfolios.
Revenue and profitability overview. Let's start with the top line. Gilead reported a total revenue of $7.1 billion for Q2 2025. John, can you elaborate on the key drivers behind this growth?
Absolutely. The revenue growth was primarily driven by a 4% increase in product sales excluding Veklury, reaching $6.9 billion. This was largely due to higher sales in their HIV and oncology segments, particularly Biktarvy and Trodelvy. Additionally, their non-GAAP EPS remained flat at 21 cents, indicating stable profitability despite increased R&D expenses.
And how is their cash position looking?
Gilead's cash equivalents, and marketable debt securities stood at $7.1 billion as of June 30th, 2025, which is a decrease from $10 billion at the end of 2024. This reflects their strategic investments and stock repurchase activities.
Product performance and strategic initiatives. John, let's talk about product performance. Biktarvy and Trodelvy have shown impressive sales figures. What can you tell us about these products?
Biktarvy sales increased by 9% to $3.5 billion, driven by higher demand. Trodelvy also saw a 14% increase in sales to $364 million, thanks to strong demand and inventory dynamics. These figures highlight Gilead's robust product portfolio and their ability to meet market needs.
Gilead also received FDA approval for Yeztugo. How significant is this for the company?
The FDA approval of Yeztugo as the first twice-yearly HIV PrEP option is a major milestone. It not only strengthens Gilead's leadership in HIV treatment, but also opens new market opportunities. Additionally, Gilead announced a new $6 billion stock repurchase program, reflecting their confidence in future growth.
Operational efficiencies and future outlook. Let's shift focus to operational efficiencies and future outlook. How is Gilead managing its operations?
Gilead's product gross margin improved to 86.9%, up from 86.0% last year, driven by a favorable product mix. However, R&D expenses increased to $1.5 billion, reflecting their commitment to innovation. Looking ahead, Gilead has raised its full-year revenue guidance to $28.7 billion, and non-GAAP EPS guidance to $7.95 to $8.25, indicating strong confidence in their growth trajectory.
That's promising. What are the key factors contributing to this positive outlook?
The positive outlook is supported by strong product performance, strategic partnerships, and ongoing innovation in their core therapeutic areas. Gilead's ability to adapt to market changes and invest in future growth is a testament to their robust business model.
EPS forecast and analyst expectations. John, let's discuss the EPS forecast. Analysts were expecting an EPS of $1.95. How did Gilead perform in this regard?
Gilead exceeded expectations with a non-GAAP EPS of 2.01 cents, beating the forecast by 0.06. This performance reflects their strong operational execution and ability to manage costs effectively despite increased R&D spending. The positive sentiment among analysts is a result of Gilead's consistent ability to deliver on its financial targets.
That's great to hear. How does this impact investor confidence?
Beating EPS expectations generally boosts investor confidence, as it indicates that the company is performing well and managing its resources efficiently. Gilead's strong financial performance and strategic initiatives are likely to continue attracting investor interest.
Key takeaways. As we wrap up, let's summarize Gilead's performance this quarter. John, what are the key takeaways for investors?
Gilead reported a 2% revenue growth to $7.1 billion, with a non-GAAP EPS of 2.01, beating the forecast of 1.95. The FDA approval of Yeztugo and the new $6 billion Stock Repurchase Program are significant milestones. Overall, Gilead's strong product performance and strategic initiatives position them well for future growth.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Gilead's performance in the comments below. Until next time.